Hello, everyone. Welcome to Rule Investment Media. My name is Albert Liu. We have a great treat for you today. Rick Rule is joined by good friend Frank Trotter for a discussion. Frank Trotter has been involved in the banking business since 1981. In 1998, he became co-founder of Everbank.com and National Direct-to-Consumer Bank, which was acquired by Everbank Financial in 2004. From 1998 through the sale of Everbank Financial Corp to TIAA in 2017, he served in various executive capacities, including chairman of Everbank.com, president of Everbank Direct, and chairman of Everbank Wealth Management. Today, he is co-founder and president of Battle Financial. Rick, take it away.
Thank you so much, Albert, and welcome, ladies and gentlemen. I need to disclose that I'm a substantial shareholder in Battle Financial under organization, and this must be best described as a friendly interrogation. Frank Trotter has been a friend and cohort of mine for a very long time, which I'm sure the viewers will see as a consequence of the presentation. Frank, first of all, thank you for coming on the show. I know it's our sort of maiden voyage around this discussion in this format, so thanks for subjecting yourself to this.
I'm delighted to be here, Rick. It's going to be a lot of fun. As you know, this is my favorite topic, so never hurts to talk about it.
Well, let's get into it. You have been a success in banking, both on behalf of others as an employee of some large and successful banks in the United States, and as a success building and selling your own business. You are of an age, like myself, where most people wouldn't consider starting a new bank as a viable retirement operation. Tell me something as a serial banker and a serial entrepreneur about the opportunities that you see in the market. Tell me why, as specifically as you can, you've decided to come out of a successful retirement with a strong track record and put it on the line and start again.
Well, failing retirement is really, I think, going to be a serial problem for me. I was joking with some people yesterday that maybe we'll be starting another bank at age 98, another 30 years down the road. There's a number of things we really see in the market, and some of them that they still exist, but we're frankly, delighted, of course. When we started Everbank back in the 1998, 1999 era, we kind of looked out across the landscape and noticed, like everybody did, that big banks in particular, the massive branch systems, were paying little to no interest on their deposits, charging their clients fees, providing poor to awful client service, unless you're one of the few anointed people in their super private bank, and really not listening to clients, just saying, this is what we have and this is what you're going to get. Back then, rates were a little bit higher, but we launched Everbank with a 6% checking account, as opposed to zero being paid by all the Main Street banks at the time. We featured a lot of pictures of long lines at teller windows and bank lobbies that were full of people waiting and hoping to talk to a banker. And it's amazing to me that 20 years plus later, this situation still exists. I did a survey of rates at some of the large institutions, Bank of America, JP Morgan Chase, Wells Fargo, US Bank. And it's not a legal term, but I almost call their deposit rates predatory. Bank of America and a few of the others were paying 0.01 and 0.02 on their checking accounts, charging people anywhere from a $10 to a $25 monthly fee to hold that money at no interest. And then, providing mostly branch-based service that appears from the many notes we get from people looking forward to opening an account at Battle Bank to be less than what they want. In addition, the services, each of these branch-based institutions has an extreme incentive to provide items that have high fees. Some of their wealth management, some of their brokerage, some of their lending products have to be a high fee environment just to afford this large branch network. JP Morgan Leave is approaching 5,000 branches, and they seem to be building them everywhere. For the most part, it looks to us like they're vacant of clients, but obviously Jamie Dimon's a smart guy. I'm sure he makes some money. So what bottom line is we really look out over the environment. We feel that there's an opportunity to come out of retirement and really build on what we've done over our banking career at Mark Twain Banks, at Everbank, and push this forward and provide a great value to clients for that that client that really is just a little bit different and wants service, value, and a bank with capital. Some radical ideas that seem to define banking to me.
Let's get a little deeper in the weeds in this, Frank. The thing that attracted me to the original business plan for Everbank and then to the reality of Everbank was that you believed and later demonstrated that the non-interest expense associated with not maintaining a branch network meant that you could pass the savings through to depositors and in some senses also to borrowers. Could you discuss the impact of non-interest expense maintaining a branch banking network? And then later on, you and I will talk about the efficacy of the alleged service that occurs at the branch level.
I think that's a great point. When you look at a branch bank network, it's somewhere between 10 and 15 times more expensive to maintain a branch over a direct institution. And in our case, again, I mentioned the deposit rates for checking accounts at some of the major banks at the 0.01 point A. If we were to open, we had 0.7 to 1.8% on a checking account. And if that doesn't sort of pique people's interest, I'd be somewhat surprised. That is a radical approach of giving back to the client what is, in our view, rightfully theirs, because we save that money in terms of not opening a branch network. In addition, I think from a client service standpoint, since you mentioned it, we're able to field a group of people who are typically, former branch managers or senior people in a bank who have done transactions over and over and over again and put them on the phones, on the chat, on the email, anywhere where we have client interface. And they can answer the question because they've done it 10,000 times before. They get things done in a very quick and efficient manner. So between an enormous amount of cost savings for not operating a branch network and being able to have a concentrated group of highly talented individuals speaking to clients on the phone, through chat, through email, at conferences, we think we'll be able to have both the value and the service components pretty well to people's satisfaction.
Frank, just to corroborate that, I won't name the institution, but I have been a depositor and occasionally a borrower with a very large U.S. bank going back to 1967. So to say I have history with this organization is a bit of an understatement. Recently, I transferred my business from my former home in California to my current home in Washington State. And among other things, the bank somehow lost my trust documents. And it became my problem to replace the trust documents that the bank lost rather than my own. When I went into the bank branch to inquire as to the process with regards to this, they had a little white service phone that had me call somewhere that wasn't part of the branch. And I'm thinking, what does this branch exist to do? I'm a very large depositor. They don't know who I am. They lose my trust documents, and then they aren't empowered at the branch level to solve my problem. I suspect that at Everbank, this was a circumstance that you ran into with transferring accounts time and time and time again. The expense proposition around a branch network would be one thing, assuming that the service followed it. But in my own experience and my attraction to first Everbank and now Battle Bank was the fact that this expense seemed to be without benefit to customer.
I think that's been shown to us over again. And of literally thousands of people who have been emailing us. They go to our website and say there's a little button that says join the wait list. And we get paragraphs about with horror stories that may not approach your issue, but they're in the same direction. And it's typically somebody saying, I just can't wait for you to open. We were clients of yours at Everbank, and we'd love to be clients of yours at Battle Bank. You guys know how to do service. You know how to get things done. It doesn't mean we won't make a mistake somewhere along the way, but we will make sure we rectify it as quickly as possible and make it right. And it is a fascinating thing to me. We bought a failed bank at Everbank in Florida with 10 branches, and as part of this transition, I went and sat in the office for about 2. Just picked the secretary's desk, which by the way was empty. As were 80% of the other desks. And first of all, very few people ever walked in the bank. Second, and this is really the old team operating the bank, so there's very little customer interaction. The key element was that they baked chocolate chip cookies. And, chocolate chip cookies are a wonderful thing. I prefer interest. I prefer an attentive service. I prefer highly talented financial people to talk to that get done what I need to get done. But I suppose, at least in Naples, Florida, chocolate chip cookies ruled the roost. Rates and value and service seem to be something we'd rather point towards. And it's funny, I did actually have to close out a safe deposit box I had in St. Paul, Minnesota. I went to a college in Minnesota, health deposit box for who knows what reason soon thereafter, and paid the $45 for 20 years or so until I finally got into town with the key. Turned out there was nothing in it, which was interesting all by itself. But they had about a 5,000 square foot branch. There were 2 individuals in it, and they had to wait till they actually closed the lobby so that one of the individuals could come down with me to the safe deposit box. Nobody else. It's just fascinating operation and an enormous waste of money. And I actually drove past it on Monday, heading down to the Minneapolis airport. Still open, still vacant, not being used. So I think that's where branches ultimately are going to go, and more power to them.
So at Everbank, I would suggest that the thing that brought you to the immediate attention of a broad client base was deposit products. And I want to talk to you about deposit products then and now. I want to say, too, that this, I have relationships with 3 mega banks, and I have a 50-year career in financial services. And the variety of the product offerings that they have, deposit product offerings that they have, is at once enormous and unattractive and complex. I found at the same branch that I described that lost my trust documents, that no employee in the branch could describe their deposit products. They were too sophisticated, not just for a client with a 50-year career in financial services, but also for bank employees. So I want you to talk to me about the uniqueness of deposit products and the proposed simplicity of deposit products, both at Everbank and now at Battle Bank.
Well, I think it's interesting. We wonder sometimes if some of the pricing, mobile phone moved into bank, where you have what you're going to be charged on a daily basis or what fees you're going to incur. I have read through a number of these disclosure documents from some of the major banks recently, and it's just I'm sure I could write a program if I spent a couple of days working through it to pick it apart and understand it. But as you point out, they're just not that easy to understand. What you can do, what you might be paid, and what fees you might incur. At Battle Bank, we've promised people that we're going to be transparent. Our flagship account will have a high rate of interest. I mentioned somewhere between 170 and 180 if it were open today. And if you want to use it as a savings account, be my guest and never do a transaction. And if you want to use it for full checking, that's great too. So it's the same account, high value, right? 50 checks a month, 100 checks a month, whatever. Open up if you have $5,000, you can have all your ATM fees repaid to you if you walk up to any ATM in the country or indeed the world. And we just felt that simplicity is really the best thing in terms of creating a product set. If you confuse your client, if you put barriers in place, it falls on you. You concede the point by going to the branch and say, well, I'm already here, I better open an account. Or they just never come and bank with you. And so I think, that transparent, simple, high value, low to no fee approach is how we plan to do things. It's how we did it at Everbank. We felt very successful with that, and it's how we plan to do it at BattleBank.
I think one of the unique things that you did at Everbank that attracted the attention of the market was certificate of deposit products that weren't vanilla products. As an example, foreign currency CDs or investment index CDs. Perhaps you could talk about that product and whether you still think that market segment is viable today and how you might service customers with deposit products that are geared to their needs.
Back in the middle 1980s, as you well know, Rick, having been in the business as long as I have and more, rates were very high, and the U.S. dollar at the time was very strong. People were piling money into the high rate environment where T-bills were 17% and um, prime was 21.5%. People like to earn that interest rate, and our bank directors speculating in Australian English and other bonds and making a lot of money. And the light bulb went on and said, we are a bank. We can issue a deposit, either a money market deposit or a certificate of deposit in any currency we want. And it's right there in the national chartering legislation that was put in place in the late 1800s. And so we began to open what we ultimately termed the world currency deposit products, where if you wanted to make a deposit in any of the then European currencies, now euro, the sterling, you want Chinese renminbi, New Zealand or Australian dollars, Indian rupee, or any currency basically that's liquid and tradable around the world, you could make that investment as part of a diversified portfolio. People sometimes, particularly in the United States, think of cash as US dollars only, but cash is cash. That's in Japan, it's the yen. In England, it's sterling. In Europe, it's the euro. And oftentimes, that is a benefit for the client as the U.S. dollar declines. Right now, it's on a wild horse ride upwards, but we think that actually it's going to be great timing as we open BattleBank, as that trend may turn and give people a real advantage to diversify into foreign currencies and only the perhaps some market appreciation. And you mentioned our market index products. We plan to launch those with BattleBank as well. And in any given market, sometimes people have an idea, but they're not perfectly confident in that idea. So what we do is we design market index products that provide principal protection. We'll give you 100% of your money back in 3 to 5 years, but we'll let you participate in an index of some sort. It could be as simple as one of the major indexes like the S&P 500, or we can build a basket of commodities. We can build, we've done one on Japanese real estate investment trusts. We've done a number on precious metals through the years. We just had one payoff that I happen to personally own. We had about a 30% return on, which is never a bad thing. And so we really try to listen to clients, see where they want to make a diversification for their portfolio or a speculation, and provide them with an instrument to do that. So the foreign currency deposits, the market index deposits, I think do set us aside. And it certainly gives us something to talk about to some of the mainstream media. Obviously, the financial newsletters are interested in many things, but Wall Street Journal gets a little bored talking about a checking account, no matter how brilliant. But they do like foreign currency deposits, and they do like market index CDs.
And who do you think, other than a currency investor, might be interested in these products? Would it be maybe an immigrant from a foreign country who still did some of his or her life in that country? Would it perhaps be somebody domiciled in a foreign country that wanted to save in their own currency but outside of their country? Who might be the market, as an example, for these foreign currency CDs?
I think you mentioned two very good examples. Is somebody who wants to save money in their home country currency, perhaps to send money back home to family and friends. Um, you mentioned you want to save money in your own country currency, but in a different domicile. We certainly have had a lot of Canadian clients over the years that decide that perhaps the United States is a better place to be. Sometimes that's goes the other way around as well. But right now, I think there's been some instances I know that you've talked about in the last year that have set people's hair on fire and said, I still like my Canadian loonies, but I'd like to hold them somewhere other than in Canada, where I'm sure to be able to get a hold of them. But also, we have just a lot of people that have an interest in a particular currency. They have a viewpoint. Let's say that the euro is going to go from what's now a record high or low, excuse me, to a higher value. Or they want to build a basket just for diversification. So it's U.S. based investors and depositors. It's foreign people wanting to hold money in various currencies. And I think as people travel more and more, they understand currencies more and more. And as a result, when we opened this business at Mark Twain Banks in 1986, it was kind of an exotic novelty. Now it's becoming more and more mainstream, and more people feel that building that diversification is an appropriate thing in their portfolio.
And am I correct in saying that, unlike, as an example, FX speculation, your account can't be, you can't lose money. It's principal guaranteed. You can make more or less
On a
upside.
market index account, that's correct. In foreign currencies, you can lose money, of course,
Right.
because if you own the euro and it goes down, you can go down. But the market index, we provide a principal protection, typically 100% guarantee of principal, and that's very
Right.
clearly discussed.
This was a highly successful product at Mark Twain Bank, or pardon me, at Everbank, and allowed you to attract billions of dollars of deposits, really as a startup bank. What amused me as a customer and a shareholder, ultimately, of Everbank, was your ability to begin to do other kinds of banking with people who were attracted to you for a niche product. You built, as an example, a very large mortgage business. And my guess as an investor is that your marketing expense associated with customer acquisition in the mortgage business was zero, because you had already acquired that customer as a consequence of your deposit products. Did I misunderstand that as an analyst, or is that correct?
I think that it was substantially correct. Obviously, people once they are banking with you have other needs. And that could be a mortgage. They may have a company that needs liquidity. And it does help to already have the name coming via email on the monthly statement or in the mail if you choose to take paper statements. And first thing you think about maybe is Everbank, or nowadays Battle Bank. We also serviced a large number of mortgages. We're a top 15 servicer in the United States, up with the big folks. And that also provides the opportunity to say, well, Mr. Rule, you have a 6% mortgage today. We think we can get you 4. Is that a okay trade for you? And the conversation generally goes pretty well in those cases. I can't remember the numbers off the top of my head, but I think we're doing $15 to $20 billion a year in mortgage originations, which is a pretty substantial amount of money. And other lending businesses that were, complementary as well. And as we start to, Battle Bank, certainly looking at some very interesting, I think, lending opportunities, which we can get into when you're ready.
I'm ready. We've done the liability side of the balance sheet, I think, reasonably well. Where do you see holes in the asset side of the balance sheet? Where do you see the lending opportunities that aren't being addressed by other people?
I think just in general, both you as well as our team has been looking very carefully to find areas of lending that are highly secure but relatively underserved. I think you and I have joked a lot of times that we can't compete with J.P. Morgan Chase, but they can't compete with us. So I think we're going to focus on, we're planning to focus on a number of market opportunities. Number one, and I think one that's really generating a lot of excitement from people that we talk to, is lending against precious metals holdings. Right now, that's a difficult thing to do for most people. Will your local bank do it after a long conversation? Maybe, but they really aren't set up to do it on a scale basis. There may be one or two other opportunities out there to get it. Those are very high rate. So if you hold or own precious metals, we will allow you to borrow against those precious metals at an attractive rate. We will have it secured in one of our storage facilities or one of our partners' storage facilities. Typically something like a Brinks or a Lomas or a Viamat and others. And let's say, round numbers, maybe you would lend 50% against that. There's a call if the price declines, and of course there's the opportunity to sell it out. So it really looks like a margin loan, but against precious metals, and it allows you to either buy more precious metals. You can put that deck on the house. You can buy an investment property. You can do really anything, unlike a home equity loan. So it's really a great opportunity for somebody to provide a little liquidity for those precious metals holdings. And from the banking perspective, we think that's a highly secure loan because, after all, getting our money back is the number one objective of a bank. There's a number of other areas that we're looking at. We'll be doing something that allows people to open an IRA with Battle Bank and establish a way or methodology, typically through an LLC that's owned by the IRA, to purchase anything that is eligible in an IRA, like income properties. You want to buy a 1 to 4 family or a group of 1 to 4 family homes, apartments. IRA money you got after rolling your 401k over from 30 years of hard work. That's great. Love to do that. We will be able to provide a lending opportunity for you there. If you want to finance, say, 50% of that, that's a wonderful way to leverage your IRA investment very effectively, and hopefully profitably for you. And again, we feel very secure in that type of lending. And then finally, building on the experience of yourself and a number of other people in the industry, will be looking at some large-scale project lending and other opportunities as people exit markets where we feel are underserved, in the opportunity to really do some things that they probably want to do, but don't have another outlet to do so.
One of the things that you told me would occur with Everbank, but I was still surprised to see happen, and one of the opportunities I saw was your ability to interact with financial advisors and financial newsletter writers and publishers, which had the impact of popularizing your innovative deposit products, increasing assets under management, and almost eliminating your advertising budget. Can you talk to me about the alternative marketing methods that allowed you to grow Everbank from a startup to $28 billion in AUM or whatever it was by the time you sold it?
It was, round numbers, about 28 billion when we when we sold. And I think, if you take the principle, when we started Everbank in 98, 99, everybody was looking for eyeballs. I want more eyeballs on my website. And that's great. I'm not smart enough to make money on eyeballs. I kind of like to make money on deposits. And so by focusing on people who are interested in financial media, perhaps they take the Wall Street Journal, perhaps they take the Economist, perhaps they take the FT. That's great. But they're contrarians. They want to hear more. And the financial newsletter reader, subscriber, tends to be interested in these things. And the writers are also interested in opportunities. So if a particular editor, a particular writer is interested in a market, know that we like to create a product that might serve that market. And it helps us to distribute our name, either in partnership or through advertising through these financial publications. And it's incredibly effective in our view. And I think also in the view of the writers, because they're really putting ideas out there. And if there's no way to implement the idea, then the idea is not worth much. So it's always great to say, oh, I think the New Zealand dollar is a wonderful opportunity. You should buy some. And if there's no second part of the sentence, and you can make a deposit at Battle Bank to act on this, it's much more effective than just throwing a random idea out there and saying, "Oh, good luck trying to find how to do it." And we do have the financial newsletter industry is also a believer in how we do business. Some of these firms have made investments in Battle Financial. A number of the editors have put their money where their mouth is and also invest. They'll fully disclose this when they write about it. But I think it'll be writing about it as I believe so much in this that I also invested. And it's interesting, too. We obviously love to have individuals who are depositors or clients of the bank ultimately become investors as well. So everything is wonderful when it works in parallel. You get to use a wonderful service, and hopefully you'll benefit being a shareholder as well.
I guess I want to get deeper into the weeds here too. It appeared to me as a shareholder of Everbank that the consequence of your very low marketing expense, combined with your low non-interest expense from not having branches, was one of the things that allowed you to treat your depositors better while still maintaining very, very, very attractive returns on capital employed for your shareholders.
Right.
First of all, am I correct in that observation? And secondly, if true, do you think that durable competitive advantage will continue?
You're absolutely correct. That was a huge advantage for us. Our director of banking operations at Everbank, Vincent Amato, calculated that at the margin we were costing between 10 and 12 basis points per new dollar of deposit, compared to a branch bank that runs 1.4, 1.5, 1.6% per new deposit. That is an enormous advantage that we can then use to pay back the client with low to no fees, high rates on the upper decile of deposit rates nationwide at all times, and also to develop better online systems, technical systems, and so on. So it makes it very easy to deal with Battle Bank. When we launched Everbank, it was 8 years before the iPhone. And the typical question at the call center, or the answer, was turn your cap locks off. It was a new thing for a lot of people. And a lot of people were on AOL, which was all caps, as you may remember at the time. People are more sophisticated now. Not only the iPhone, but many of the other developments with Google and Microsoft and others have made people comfortable. And of course, the last 2.5 years, mostly remote work, has taken those few people who weren't on board before and sort of pushed them into being very comfortable with online service. That said, we always are available by phone to talk to an experienced banker. So yes, you're absolutely correct. Cost differential. That back to clients, earn a great return for our shareholders. And we expect that to continue at Battle Bank.
Frank, I've been a community bank investor, that is a small bank investor, for a very long time. And it's treated me very, very well. Your vision for Battle Bank, I think, is to be a community bank for the whole nation. So can you talk a little bit about how a community bank exists that isn't defined by geography, but rather is defined by interest and need?
I think one of the things we've all learned about the internet is that it's not about geography. It is about the interest that you have, actions you have, and the way you look at the world. So we expect to have a group of clients that have this contrarian, this I'm not about everything type of individual. And we should be able to serve that national community as well as anything locally. Now, it's interesting in a local bank, of course, you're sitting down with the board, you're sitting down with the sales team, and you're saying, well, I think we can get this client, and he or she goes to this club, has this affiliation, their kid will hear. Maybe if we get to them there, we can solicit them to be a client. Instead of that, we go through other channels, financial newsletters and others, build a community of individuals that really feel passionate about banking with us. And then as a result, we can then treat them like a community, no different than a community bank in a geography. If I drew a circle around almost any given location in the country, you're very restricted in terms of people that would bank with you, would do business with you, or might be interesting to do business with. By reaching out across the country with people similar interests, following financial issues nationwide and worldwide, we're able to not only attract people who are great clients, but also serve them as their needs arise and as they communicate those needs to us. Obviously, we're going to be very careful about putting money out the door. We'd like to get it back and get it back at a fair rate. But we will listen to people, will be and understand what they're talking about when they call. I can only imagine what that little white phone in the branch that you saw would say if you called up and said, I'm really interested in New Zealand dollars. I'm sure they just hang up. But we understand, we hear you, and we'll treat you like a friend and a neighbor. And as the jump on list people have been saying, I can hardly wait to get back and talk to you folks. You guys were great before.
Finally, Frank, you had said that your vision is for a bank that's owned by the customers. Further, you said that many of the analysts and newsletter writers who had supported you out of interest before have taken a direct interest, which is to say that they have become shareholders. You're going to have to raise a reasonable amount of capital for this bank. And there may be some listeners, I should caution them, they would need to be accredited, who would perhaps be interested in being customers and being owners. How do they find out more, and how do they contact you?
Well, first of all, anybody want to hear anything more about Battle Bank? Excuse me, 1 second. Battle Bank can go to our website, battlebank.com. On the website, there are the usual things, what we're up to, what we're about to do. You can join the wait list to be informed when we're going to open. And there's an Invest in Us tab. Go in there, take a look at it, see if you feel that's appropriate for yourself. And if you are an accredited investor, you can follow the link that appears on that tab and be certified, and then possibly receive an offering memorandum behind that. So there's ample opportunity for people to invest and be a client. And you can find all about it at our website, battlebank.com. And we're seeing more and more, and it's getting to be very, very exciting.
Frank, I think we've probably worn you out and likely almost worn our audience out. So I'd like to take this opportunity, first of all, to thank you for allowing me to participate in the opportunity to come out of retirement and form a new bank. But also, I'd like to thank you for this presentation to our audience.
Well, thanks so much for joining Battle Bank. And we're in the process of thanking people. Your support has been wonderful, and I know we're going to be great partners going forward. So excited to get this out the door and make both of our retirements exciting.